We are back for another debate. Keeping it nice and simple, this time we have 6 funded traders with Alpha Capital Group. Now, the further to the left that they go, they are strongly agreeing with the statement. The further to the right they go, they are strongly disagreeing with the statement. Now, we got some really valuable pieces out of this video today. Make sure, because the fun ones are at the end. Stick around and let's get into it.
In volatile markets, the ability to adapt is more important than having a solid trading strategy. Okay, divided the room. Let's go, Huss. What do you think?
I mean, your strategy should be adapting anyway. You should be able to have a strategy that functions in all areas, I think. I don't think you have to just change just because there's more volatility in the market, change my whole strategy.
I trade based discretionary, so based on volatility, I'm going to change my trading style. Even though it's the same plan, if it's no volume in the market, I'm going to have a different approach.
Yeah, adaptation is everything in the market, especially when you've got high volume on the indices. It's how you trade that market. It's very much reacting to the market rather than just following a rigid mechanical plan. If your mechanical plan works in lower volume markets, with the increased volume, your position is going to be way off. So it's all about adaptation.
I'm somewhere in the middle because I think you want volatility in the markets because that's where you're getting your trades from. But if it's something big like NFP or CPI where you know it's going to come, then you need to adapt accordingly. But that's what your trading plan's there for. You're taking these things into consideration beforehand. So somewhat in the middle for me.
I slightly disagree because I feel like your strategy should have that already accounted for, right? If it doesn't work for volatile markets, you should already know that. That's what I think.
Yeah, I agree with it. I just think that in news, I don't really trade news or anything with volatility. So it's time to step away from it. What do you think that means to the opposite end of the room?
I mean, yeah, it's all well and good having your plan account for certain aspects of market volatility, but you're not going to see that volatility until it enters the market. So it's about just trading what's in front of you. Obviously, you can have little predetermined checklists of, okay, when the volume's like this, I act accordingly, or when there's news, I lower my risk, or you have certain measures in place, but ultimately, until you see the volume, you can't react until you see it.
Well, no, I agree with that. But the thing is, I just think, like they said, the plan will have that in account. For example, I trade gold anyway, which is obviously very high volatile itself. So I already know that, I don't change my entries, for example, just based on volatility. I'll just, I'll have the same, I'll maybe change my ranges, but that's still, the analysis is still, I'm still marking my ranges the same way I mark. It's just accounting for what's there, I guess. Yeah.
So for me, my entry is very much based off of volume. So my entry it will change dependent on the volume of the market. If it's a lower volume market, I'm entering based off of a market structure shift. If it's higher volume, I'm entering based off of sentiment and the strength of the candle relative to the key level. So it does make a massive difference. And although it's in my trading plan to have that variation, I can only decide which variation I'm using when the market has the volume. So
yeah, I guess it all depends on someone's plan, innit? What your plan is.
Scalpers make more money than swing traders.
Scalpers make more money than...
Divided the room again. Let's start with that.
I think with scalpers you can make a lot of money in a short period of time, but over time swing traders can also make a lot of money, so I'm kind of just in the middle.
Daniel, you just moved right.
I heard the question wrong. I thought you said scammers make more money than swing traders. That's a different topic. Scalpers, no, I think scalping is the least profitable trading style from the stats I've seen, from all the numbers, the back end stuff. There's just too much emotional management that is involved in scalping. So yeah, I think swing trading is a more profitable style, but just a lot of traders can't swing trade to save their life. Everyone lacks patience and no one can really firm it like that. But if you can do it, it is the most successful style.
Okay. Well, Liam, you're on the agree side.
The scalpers, yeah? Well, look, if you put the numbers game, if you're a really talented scalper and you're getting more volume trades, like high 70s, 80s, that kind of thing, or you're just doing the same thing where you're only finding out these results after a week or how many other days you're getting. If you just add the numbers up over time, the scalpers get more money in my head. But wherever, when you get the real big boys who are putting in large amounts of money, large capital, large risks, yes, they are getting in like huge payouts. So it's a kind of depends. For the average guy doing 1-2% trades, I'd say the scalpers get more. If you're using that same kind of like risk management for your swing trading, the numbers kind of don't add up. The scalpers get more in my head.
I disagree. I think the goal is to get to swing trading. I think that if you're a good swing trader, you're going to have different entries. You're going to scale in, you know what I mean? Scalping is very, very difficult. And even if you're at an elite level, like depending on the market you're trading, you're going to get wiped out, you're going to get faked out so much. You know, I think if you're a really good swing trader, you can pretty much eat and have to do nothing, you know?
Yeah, I feel like when you're putting on, the thing is with scalping, that's why I moved. Because the thing is with scalping, is say you're putting on larger size, you're also going to get larger slippage in terms of when, you know, if you're putting on huge lot sizes, you're going to get larger slippage. And that's why people that put on massive sizes, they usually, this is why liquidity sweeps and things happen, is because they have less slippage and they have better conditions in those areas where the pools are. So they have a liquid market where they can, you know, sell. So that's why I've moved a little bit into the disagree bit.
Yeah, I feel like swing trading should be like the next step for traders, because swing trading, you can look at it more professionally because you can do like fundamental analysis, which is looking at like actual stats and information, right? And making decisions based on that. And scalping has more like randomness involved, which you can kind of get rid of the randomness if you do fundamental analysis and then do swing trades instead.
So kind of going off what Liam was saying about scalpers taking more positions, I think it's sort of a trader's fallacy that more trades equal like higher percentages like returns. Like I think it is very much quality over quantity, less is more. Statistically from the stats I've seen from some of the prop firms back end, the traders making the largest percentage payout are taking the least number of trades per month. So it is very much less is more, because it's a simple mathematical equation. The more times you enter the market, the higher your monthly risk is, because you have the more potential to be losing positions. So you take less trades via swing trading, and then even if your win rate is not necessarily that high, you just have far less risk in the market.
I mean, like, I can't say a single word to disagree with that, to be honest, but I think what it boils down to is what level of trading are you at? Are you at the point where you can really be risking these higher amounts? Or for the average trader who's a few years into the game, are you going to be making more money and getting more results doing scalping? You know, if you're like first starting off doing swing trading, the results come in quite slowly, you're not really progressing as much. I think it just depends what level of trading you're at, really. I think, yeah, where your starting point is. Yeah,
start the journey. People are wanting to, they want that fast movement, and then as they progress over time, they go towards more swing.
And once you've built up that capital, that's when it's worth holding a trade for 2 weeks, you know, and then getting that nice 2, 3, 4%, whatever it is. Whereas, you know, the guy first starting off who's got to, I don't know, like reach a certain profit target and do a few trades and stuff, like you get more success there, but it's all level dependent where you're at, I think.
And it comes down to your personality type too. Like,
True.
You know? True. Not everybody has the patience to be a swing trader, you know? You gotta do what works for you, I feel. Because I think all of us are probably scalpers, isn't it?
Yeah, realistically, yeah.
Back testing is a waste of time. Forward live testing is bad. So essentially, back testing is a waste of time, and forward or live testing is much better.
I think back testing is good at the start of the journey, but there is a point. Too many people spend too much time back testing and they don't get that experience in the market. So I do agree that back testing can be a waste of time, but there's a certain point where you've got to then forward test it and get in the live markets to have all the emotion what comes with the live markets.
I just say, like, it can't be a waste of time because it's a part of the journey that you can't skip. So like, if you're just doing it a part of your system every day, then maybe it is a waste of time because you already have your edge. But if you're learning how to trade, you gotta backtest because you gotta know what you're doing. You gotta analyze the game in it.
I think it can be a waste of time if you're not honest backtesting, because you can backtest and then if you're not doing it live, and that's the candles coming and entering that way, then you're kind of just like cheating almost. Whereas if you're like live testing, that's when you're doing it properly. So some people will go back test and say, oh yeah, I would have entered here, I would have done this, I would have done that. You got to be doing it honestly. If you're not doing it honestly, then you could potentially argue live testing's better. But honest back testing is far better to get your skill set, understand when your entry points are, understand how you trade, understand how to manage trade whilst you're in it. That's where it comes from back testing as well, if you do it honestly.
Yeah, I think both of them are good. Obviously, you should continue doing both of them. Actually, you should transition from back testing to live testing, but the back testing needs to be done first. And because think about how much data you can gather in a short amount of time from back testing. You can back test a year long of data within like a month, for example. Whereas in the live testing, obviously a month is just a month. So you need to do that, and the numbers that it will give you confidence for your live testing, because then you're thinking objectively, you know your win rate, you know your average, you know R, you know your max consecutive losses or win streak that you usually see over 200 or 300 trades, and that just helps you get further on and go to the live testing, I guess.
You know, the way I like to think about this is, so a strategy is like picking a wife, and then the back test is the wife's past. So the forward test is going to be only as good as the back test.
Can't disagree with that.
Some wise words right Yeah, so I think backtesting can definitely be a waste of time, and a way, like the way a lot of traders backtest is a waste of time for them, because you're just sitting there spamming the playthrough button, you're not really paying attention. Whenever you take a loss, you're not really journaling it, you're not really understanding why you went through that process, and you're sort of just backtesting for the sake of backtesting. But if you're doing purposeful driven backtesting, you're really looking at your entries, your exits, behavior, you're going in it with a pure intention, and you're then taking that across to a live market and implementing it, then it's 100% very useful, and it is definitely a necessity for profitability.
Trading psychology is overrated. Strategy is more important. Okay, we'll start with us. Shout it then.
Well, I think the thing is, right, this is if you do it properly, your strategy is going to give you confidence in terms of the numbers, in terms of the law of large numbers is going to play out. So it sort of, psychology is still there, psychology is always going to be there, but it kind of really lowers it. Like I generally don't have issues being in drawdown. I don't have no issues being in drawdown or anything like that, because I've had so much data now that, you know, it's the psychology bit. Everyone thinks it's just psychology, but then they have no actual solid objective data to back up their trading, you know.
I mean, like, I hear where you're coming from, but I think that's because you spent that time going through that data and you've built that psychology, and you've like reinforced it with everything you've been spending time learning. And if you just don't have that, like you kind of just learn the strategy, do a little bit of back testing, don't really understand your data, don't accept your losses, that can be really damaging. But you'd say no, and because that's only because you've put in so much time and effort to learn it and really like think about it, and you know it like the back of your hand now. So that's where I'm saying no.
I personally think if psychology was overrated, if it was all about technicals, then the best traders out there would be purely mechanical traders. Manual trading wouldn't be a thing, it would just be EAs and bots, and like it would all be coded because there'd be no human emotion involved. But the fact that it's still very much like manual trading, and manual traders are still like the main people out there, it does go to show that it is primarily a psychology driven market. Obviously you need the data, obviously you need that confidence that comes from the technicals, because without it the psychology is just delusion. So like you need both to really work and be profitable, but you can't have one without the other.
Yeah, I think it depends where you are in your journey as well. You build more intuition through experience, and then the intuition is why I can stand here. But like obviously before we build the intuition,
at a later stage, your psychology doesn't really become a factor. But for the large majority of people still struggling, their psychology is the biggest barrier for entry.
Trading during the London and New York market sessions is more profitable for traders compared to the Asian session due to higher liquidity and volatility. Oh, Mr. Asia, I forgot.
Oh, more
I like that. Diversity.
diverse. Mix it up a little bit. So I know profitable traders who don't trade New York and don't trade London, they trade Asia and stuff. Generally speaking, majority of traders are trading the two main sessions because they are just better trading sessions in my opinion. But I don't think it necessarily means that they're more profitable to trade. I think it's just preference, just whatever floats your boat.
Liam, you trade Asia?
I do, yeah, I do. I think, you know, the Asian markets work for you well, or living in England or like living in like New York, for example. It works for you well if you can do it at certain times of the market where, you know, you've got very high bullish activity and you're going to go in a certain way. So you're not there like every single day trying to nail it in. You can kind of like plan it around it when you get in your nice like retracements or like you've got daily drawdowns or something like that where you can get yourself back into the market. But for the most people, I'd say the way it works out where in England, for example, you can trade London, you can trade New York, fits into your nice 9-to-5 lifestyle schedule. So it's more profitable that way in terms of balancing your life and trading, in my opinion.
I agree. Cole?
I'm kind of like neutral, but yes, because just like Daniel said, I mean, it all works, you know what I mean? But I believe that volume is a part of trading, and there is more volume in New York and London. That's why you'll find a lot more traders trade in New York and London. I trade New York and London. I don't even touch Asia because you have like no volume, and sometimes it's like little fake outs. But if you do trade Asia and you are profitable, it doesn't mean anything. You know, if you're profitable, you're profitable. But I would have to lean a little bit to the London and New York just because the volume's there, and majority of traders are trading in it. So, but it doesn't really matter as much, I feel it.
I feel like exceptions don't make the rule, right? So there's obviously going to be traders that do well in Asia, but most traders do well during NY or London because the volume's there. And I mean, the yen's not doing very well right now. Maybe something's wrong on the Wall Street there in Asia, right? Yeah, maybe something's wrong there.
I think if we go back to the markets like fundamentals, right? Markets are essentially an auction between buyers and sellers. So if you're in New York session or London session where there's the auction's bigger, you're gonna get higher quality positions. Otherwise, everyone will just go trade these try and do day trading on meme coins and things like that. The more liquid the market is, the more structure will form based on an actual structure will follow and trends and highs and higher lows, and you'll get less fake outs because there's more liquidity in the market. So when the trend is going, it's more likely to go.
That's solely dependent on your strategy and your trading preference. So you might be a trend trader and you want high volume, you want continuation moves, but I might be an Asia fake out trader and I love sitting there in consolidation, just taking the 3-pip fake out. That's my trading style. I'm just sick at doing that. Yeah. Like personally, I don't do that, and I much rather high volume during New York, so I do agree, but again, it's all preference, isn't it? If you have a different trading style and it works, it works.
Yeah, I agree with us, to be fair. Like, there's more participants in London, New York session. It's all I've ever traded. I've never touched Asia. But yeah, you get the bigger moves, which I'm looking for in the markets. So I'd agree.
Market structure is more important than liquidity.
Oh yeah. Yeah. Yeah.
Everyone happy where they are?
I use both market structure and liquidity, so I wouldn't say one's better than the other. The main times I get into trades is when we've had raids of liquidity and we've got market structure in flow with that liquidity, so I'd say I use both together.
Yeah, I just moved because liquidity is obviously still good as well, but market structure, you know, on higher time frames will show you what's going to happen with the liquidity on the lower time frames. So that's why I just moved this a little bit more. But yeah, I still would say market structure is more important as well, because you can't be waiting for liquidity on like really high, like weekly liquidity, but the weekly candle might show you because the structure of the weekly candle might show you what's going to happen and which direction to look for the liquidity sweep and things like that.
Yeah, I mean, my strategy is entirely based off of market structure with like some other factors. I do still use concepts like liquidity, but like market structure is the primary method of identifying where the market's headed. Not to get too philosophical here, but one could argue that liquidity is just a break of market structure. So you can't really have the liquidity without the structure. So if you just primarily look at the structure, you don't really need the rest. It's just sort of a little add-on, and it makes the ICT fangirls feel like, they're doing more in the market. You're just looking at structure, bro.
I mean, structure is the market, but the liquidity is needed to make the new structure, you know? So it's like not one's more important than the other, but structure is the foundation of it, isn't it?
Oh, yeah, I just realized that I only trade market structure. I never even look at liquidity.
Oh yeah, it's just, look, liquidity's got like good ideas of where the price and the market might go. Whereas market structure, if you really dig down to it, that's going to give you more indicators where it's actually going to go. It's just like a little Easter egg hunt. Oh, we might go here, we might go there, but this is where the path's taking you. And if you know where the path's taking you and your strategy works that way, then yeah, works better.
ICT is one of the best traders in the world.
No. I'm going to stay here. I'm paying him some respect. I'll pay him some respect.
Okay. Start with Armand.
I personally think it doesn't matter. Like, he could be the best, could be the worst. I just don't care about him. So, I'm in the middle.
That's why I disagreed, because I don't care. I mean,
I'm just in the middle, you know. Don't want to disagree, don't want to agree with him. He could be good, he could be bad. I've seen bad
but you have
things
these
about him.
ICT gurus, like what? Like,
But then, like, a lot of people are making money with his concepts, right? But then at the same time, you see a lot of stuff like he faked withdrawals and stuff like that.
Yeah. I mean, his concepts do work in it. The question is not whether or not his concepts work, is whether or not he trades them successfully.
and he's the best.
And I don't know if you guys have seen that like 40-minute video by Iman Trading exposing ICT in it. There's a lot of incriminating information surrounding the man, the myth, the legend.
But that's like normal
That's
with
the best
famous
part
people.
of it though, isn't it?
Yeah.
That's the best
I mean,
part.
it is a
like,
cult.
come on.
The question
Every famous guy has, like-
was he one of the best traders, right? All of us are not even one of the best traders. The best traders are those ones that you do not know, bro. Like they are the low key. Their face is nowhere. They're trading like 9 figures and stuff like that. They're the best. And the ICT is none of us are even near that. What that is. That's different level. That's what everyone wants to be.
I mean, like, look, I think everyone's got respect for him in terms of his concepts. Everyone's taking his concepts in bits and pieces at some point. And the concepts do work, we all know. But the trader himself, you know, it all started off when he done those live streams, right? Done like a few live streams, and he was getting like red, like it was not going well. And then, yeah, little bits and pieces, like he's faked some stuff and whatnot. So I'm gonna be over here, but we gotta pay some respects. Like, we know the concepts do work. And he's a good teacher. Like, if he's teaching, I'd be like over there maybe, not fully over there. You know, some of them longer form teaching and stuff, boy, you don't wanna listen to that and crow for people.
It's possible to trade $100 to $1 million.
FX Alex G.
Okay, Daniel.
It's very much possible. The market, you can turn $1 into $1 billion. It's whether or not it's realistic is a different topic in it. Majority of traders will never do that in the entire career of trading. I have known some traders who have flipped ridiculously small accounts into unfathomable amounts of money, but just whether or not they keep the money and take it out, different story.
Well, flipping 100 to such a big amount, obviously in the market, sure, you can say it's possible, but if you do the maths behind it, you could say it's probabilistically impossible. Sure, you might get lucky, maybe one guy in a million might do it, but the flips you need to do and not fail along the way, and then repeat, if you do the maths of all the sequences, you're most likely not gonna hit that. You're better off like gambling the lotto or something, same probabilities. Someone does win it.
The question was, is it possible? And to be profitable, you have to be floating in profit. So if you have good psychology, you can do it.
But it's like, think about it, then it will take you like an infinite years. If you have a good psychology, a good strategy.
Not really though, because once you get
flipping to win every single
If you
trade.
full port every position, and dependent on your RR, so for example, I got $100, I trade a 1 to 5 RR, I full port 1 to 5, I'm up 500. I then full port the 500, 1 to 5, I'm on 2.5. It starts to compound very, very quickly. You actually don't need that many consecutive winners in order to be up a stupid amount. But it's just that one trade that will wipe you out, and it typically
And that
happens.
trade will happen. It literally will happen.
Not skill issue, bro. Skill
Especially
issue.
the higher the risk to reward, the more likely that trade will happen.
True.
But is it possible?
It's possible.
It's possible.
Certainly it's possible.
It's
very
unlikely.
unlikely,
If it's not
but it's
possible,
possible.
if it's not
Yeah.
possible, I feel trading's fake.
Yeah.
But then everything
Because it is possible.
That's
Because
true. That's true.
It's a probabilities game, isn't it?
You can, yeah.
possible. I could start levitating right now. Possible. Right?
But is this mathematically like just?
It's just,
Yeah.
is it likely?
Mathematically
Is it
impossible.
likely? That's a different question.
But it's possible. Who thinks Alex G will do it?
Gonna do it. I watched his last series. I think that the pressure got to him last time. He was doing a good job, but then he's like, he got to 300K, bro. He was a couple flips away. It's just, you got to have your psychology. But I'm rooting for you, Alex. I think you can do it. I definitely think you can do it.
I mean, he did buy a Bugatti.
Yeah.
And he
Yeah,
got, did you
maybe
see
that
his
was
1 to
100.
1 million? He got far, bro. It just, he started psychology, bro. Ego, you start thinking you're right. And
I
he couldn't
think
take it off.
he's got a lot of free time to dedicate towards the challenge of just doing. He's going to continuously do it until he does it. He's going to do it at some point. Okay, the whole process, no. But when you boil it down to it, when you got your skills and everything, your years and years of work, and you are where you are, it's very simple. Like, we're not asking you to do a lot of things per day. Like, you are essentially, when it all boils down to it, fuck psychology and everything else, you are just literally clicking a few buttons on a laptop. It's easy in that sense. Like, it's hard, but like to get there though. But once you're there, it is easy. It's just managing yourself and making sure you actually can handle those situations. So, yeah, in theory, it's easy. It's easy.
But that's coming from a profitable trader. If you look at the data, 90% of traders lose. And because the market has an edge, it goes against human nature. We're greedy, we FOMO, we have a lot of issues with us. We are very egotistical, we're very arrogant. It goes against a lot of human nature. So you have to like build yourself into that individual. And a lot of people don't take the time out. A lot of people aren't disciplined enough. And a lot of people just give up before we get there. It's very, very hard to get to that mental space to be consistently profitable. Like, we're prop firm traders, and we'll blow a funded if we can get it right back. But imagine if it was a live account, you just blew your whole, you know? Like, you didn't have that like possibility to even get it back. It's very hard what we're doing, you know? So I think it's a journey that takes a long time. It's like a never-ending mastery of self, you know? And that's hard to do, I feel.
Yeah, I think that intuition that you need to build is just no joke, bro. Like, takes some serious work to build that intuition, like, that allows you to become profitable. And yes, it's easier after, but it might be easier after for you, but the intuition still needs to be there no matter what. You have to still do that and perform, because it's a performance sport at the end of the day. You have to stay high quality as a performer in the charts. You can't just slack off and just think it's easy now. But if you don't keep an optimal performance, you're going to lack, and then your P&L is going to do the same.
Like, I do feel like everything you guys said is completely true, but the actual trading bit itself is just the bit where you're live clicking. That's it, you know? Everything you guys said about the intuition, the back testing, the, you know, first working on your psychology and your emotions and shit, that's all shit you kind of do outside of trading time.
But that's a part
the actual
of
trading time itself.
That's
like,
a part of trading, though.
Yeah, of course. But like, just the actual trading part of it.
Like to hit the button?
Clicking the button bit, that's easy, yeah.
Yeah, because I think everything is easy. It's all about the price. Like, are you willing to pay the price? It's input versus output, right? So everything in life is easy as long as you're willing to pay the heavier price for it.
But is that price an easy price to pay?
No, but it's easy.
Then it's not easy. If that price is not easy to pay.
But everything can be easy.
It's easy to take someone's
if you can
life.
pay the price.
Are you ready to go to jail forever? Like,
Well, that's up to each person then, right? Yeah. It varies from person to person then, how hard someone's willing to work for it. If for someone it could be easy.
Yeah. No, agree with you.
I think if you ask someone who's never traded before at the start, is trading easy, they wouldn't. For someone who hasn't traded, they don't know anything about trading. I think it's the amount of hours you put into trading which slowly makes it easier and easier. Once you get profitable, then you know what you're doing day in, day out, staying professional. So I think the further you go into the journey, the easier it gets, but I wouldn't say trading is easy.
Alpha Capital is the best